Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 26 weeks ago here, and at every opportunity since, I have said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal." And that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either, end of quote. I think with us being now in the second month of the new year of 2025, I should now set aside this as the world and my charts have moved on. And there are more recent and more interesting features to discuss. There are three main features I would like to discuss today. The first is a big picture item, and that is the potential we now have for a very large 2024 to date, July 2024 to date, double bottom pattern. We are on the verge of completing the construction of this pattern, and also on the verge of triggering the outcome. This, if prices break higher, over, and here is the bit you need to concentrate on, as I'm not exactly sure which one of these I would use, but over the May to August 2024 move at 1098, that's the 50% Fibonacci line, or the 61.8% absolute Fibonacci line at 1106. Then we could have a primary potential up as far as 1195 and a secondary harder to achieve potential up as far as 1235. Something to take on board. The second feature is the possible bull channel we have seen generated since the break up over the old broken July to September bearish shift pitch hawk in the middle of January. That was that pitch for the bull channel is now 1059 to 1142. Now the upper trend line is highlighted in dark blue on my daily chart, as I have high confidence in it, as it has multiple points of contact with the top of the market since late December 2024. However, the lower trend line is only a 2-pointer, which is enough, and so I have chosen for now not to highlight it though, purely because it is only a 2-pointer. We'll see how this develops. Finally, and the most immediate point, is that this week we're already set up for a weekly key reversal here. Thus, if we close tomorrow, so that's Friday, either over 1069 or under 1057, then we'll be on. Anything in between will have a lesser outside week pattern. Well, right now we are looking at a weekly key reversal up here. Chicago soybean meal. The main recent pattern driver here in this market had been, I suppose still is, the dark blue May 2024 to October 2024 bearish shift pitch hawk that you can see clearly highlighted in dark blue on my daily chart. The market is right now just running underneath the overhead, well actually on the overhead upper tine itself. It's currently at 318.20. This pattern had previously been breached on the upside in January, but it had not been broken, and it had also been reinforced by a congestion area further overhead between 323.30 to 326.90, as well as the declining gold long moving average currently at 323.70, along with the nuisance value, I suppose, of the bright red trendline extension to the July to September 2021 descending wedge pattern that's currently at 320.60. I also reckon you might include the upper trend line of another feature which I'll discuss shortly. This dark blue bearish shift pitch is being severely tested right now, and I suspect it might not have long to go. Looking below the market, we have support from the flatlining mauve medium moving average currently at 307.60. And to a certain degree, the green short, the bright green short medium move, no, it's not bright green, it's just a normal green color, short medium moving average currently at 302.40. But perhaps the most interesting support and feature is the mid-December 2024 to date bull channel that might possibly morph into a bullish ascending wedge pattern, and that's currently 305.40 to 330.20. The lower trend line is highlighted in bright green, but the upper trend line is not highlighted as yet. Now the reason for this is that the lower trend line has effectively 3 points of contact, while the upper has only 2. That's more confidence in the lower trend line right now, but it has the requisite 5 points of contact. A final new feature which I like to discuss is that we are set up right now to make a weekly key reversal here. Thus, if we close tomorrow, Friday, either over 313.10 or under 309.60, then we would be on. Anything in between it would have a lesser outside week pattern. Right now we are looking at a weekly key reversal up, but it is not by much. This commentary would not be complete without me discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024. And that is the annual key reversal seen here, annual key reversal down seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted here for 85 weeks. So coming up to nearly 2 years. I quote, "I now only need to remind you once again of my words of 67 weeks ago," so that's now 85 weeks ago. "And ever since when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duty came about at the end of 2023 and I've been living in the shadow of this pattern ever since." End of quote. I've also added it ever since, and I quote, "If there is only one thing you take away from my musings, let it be those words. Let it have been those words." End of quote. Today, as we enter the second month of 2025, perhaps, just perhaps, that shadow is now dimming, brightening, whatever, and other features might start to take precedence. Chicago soybean oil. At the end of last year, I drew what I called, and I quote, "a new prospective dark blue bullish Andrews pitchfork" that I drew 4 weeks ago, which is now 11 weeks ago, for the mid-August to late November move. End of quote. I have since finessed this into a mid-August to late December dark blue bullish Andrews pitchfork with the market in between the overhead middle tine, currently at 47.99, and the lower tine below, currently at 41.82. The middle tine overhead has been tested throughout January on the upside and has mainly held down prices. However, that is not all. And I am somewhat loath to mention this, but that is not the only bullish pitchfork for this move, as we also have a bright red, shallower bullish shift pitchfork operational for the same move. The market is right now between the middle tine below, currently at 45.07, and the upper tine above, currently at 50.17. Now in recent times the middle tine has been tested for this one on the downside and has also more or less held, and that is where my small quandary is, because I do not like having, as in the case here, both the bullish Andrews pitchfork and the bullish shift pitchforks for the same move on the same chart at the same time. One should morph for finesse into the other, usually, but not here, as both are still valid. Nevertheless, that is what we have, and until something else shows itself up, I will stay with these pitchforks. Now, talking about something else showing up, we have an immediate open question here. Is the action since early January today, is it a double top, or a bullish halfway hesitation, or is it something else entirely? That is actually the most interesting question. I'd just keep a wary eye on the old congestion seen back in July 2013 between 46.80 to 47.30, as it seemingly is still somewhat influential even now.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.